Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Now remember, it's panned out to be a rather weak day because we've now tested 24,700 on the downside. We are trading the low point of the day. There's been an extreme amount of choppiness and high volatility, 155 points lower for the Nifty. If you look at India Wix, that's in fact back above the 12-odd levels. 6.5% of a spike is what you see near the day's high point as well. Among the sectors, barring Pharma and FMCG, the defensive space, rest all of the sectors are actually down in the red. When we look at the gains on the Pharma, that's only limited to half odd percent. For FMCG, it's just 0.2% higher. But what's dragging? It's real estate. That's now down by almost 4%, 3.9% of a fall for the real estate index as a whole. There's a sharp crash that we are looking at on this space, and it's now down, to the day's low level. Now let's look at the banking space. Private banks are also down by about 1.5%, largely led by the disappointing set of numbers coming in from Kotak Mahindra Bank. Apart from this, look at metals. Small caps, IT stocks also almost 1% lower for all of these stocks and sectors. And when we look at the top movers also, it's limited to the same names that, initially moved up in the morning trade. Shriram Finance, Cipla, Hero, Moto, HUL and SBI Life. Whereas on the downside, Kotak Mahindra Bank is now down by over 7%. Bajaj Finance is down by nearly 4%. You have Wipro, BEL also post earnings. It's coming down by 1.5%. Bharti Airtel, Indusind Bank is another one that's declining 2.3% odd in trade. Let's look at the F&O movers. Laurus Labs post earnings has moved up 6% higher. Emphasis has moved up. Shriram Transport Finance and Amber Enterprises. These are the names that are holding up in a weak setup. Whereas on the declining side, again, on the F&O pack, Kotak Mahindra Bank, SBI Cards both post earnings. CDSL post earnings as well is declining. Lodha Developers is another one from the real estate pack that has really taken it on the chin today. In fact, from the broadest index, what's happening? We do have some names that are doing very well in an otherwise very weak setup. Look at a Cardtrade Tech that's reported its numbers and it's up by 10%. Profit has doubled. EBITDA is up by almost 98%, and that's why the stock is higher in trade. Acme Solar Holdings is up. Vimta Labs, you can also see names like Sterlite Technologies. Apollo Microsystems is also rallying. We've already marked out for you Laurus Labs. Hind Rectifiers is another one that's also on the move. Stovecraft from the kitchen appliances space is also hovering higher. Indo Solar is another one. These are the stocks that are actually hovering higher in an otherwise weak setup. But what's down? Kelton Tech is down. You also have names like Paras Defense that's down, RPG Life Sciences, Automotive Stampings. All of these stocks are actually trending lower in trade. But let's welcome our guest on board. We are now joined by Mr. Gaurav Sharma, the Associate Vice President and Head of Research at Globe Corp Capital, to share with us his views on the markets. Warm welcome to you, and thank you so much, Gaurav, for joining in. Let's try and understand, first up the key reasons why the market breadth is further weakening. We've already seen 4 consecutive weeks of losses for the markets, and this is the longest losing streak for the markets that we've seen since October of 2024. So the Indian markets have really not been doing very well. It's very, very stock selective and very few pockets that have been consistently holding up. And now we've tested 24,700 on the downside. What do you make of this kind of a correction?
Yes, hi Sakshi, good afternoon. Good afternoon to all the viewers. So, rightly pointed out, day with complete red in color, week starting on a negative note. I think it was pretty much on cards actually. Over the weekend, we saw a host of companies coming up with their numbers. Kotak Bank disappointed the street to a larger extent. IDFC First too couldn't, keep up the pace as it was started up with ICICI and the HDFC banks. Apart from that, it was overall a dismal set of show coming from the private sector space. Having said that, the PSU banking did set a mark with Canara and Bank Baroda marching a little bit on the lines as they were expected. So I think all in all, it is the show led by Kotak Bank. The kind of dent it posted in the initial 15-20 minutes of day has actually set the tone for the entire trading session, and it is having a toll on the markets. Real estate, on the other hand, is a kind of a surprise coming in. The pre-sales figures that the real estate companies were posting was quite encouraging, but the kind of results they are coming up with clearly goes to show that the pre-sales numbers did not converted into actual bookings, and hence what we saw is a clear dent. A DLF is which is the largest as far as the market capitalization of a real estate company is concerned, is down about 4.5%, and more pain is likely in the coming 1 to 2 trading sessions.
Okay, got that. Let me quickly look at what else we can discuss. Gaurav, before we discuss more about the macro setup and the markets and how are they to follow, there are specific sectors and pockets that you also mentioned, and many that also warrant our attention. So we'll slowly and gradually just look at that aspect. Today, real estate, that's the one that's taking it on the chin. Nearly 4% of a drop there. Now, optically, most of the earnings that actually came in did not show us so much of a disappointment. Even when we talk about Lodha or a macro tech, most of the parameters have actually shown growth on a year-on-year basis, although sequentially there has been some softness. But what exactly would you say is the cause behind sharp reactions on the downside on names like a macro tech and Oberoi Realty? What's happening across the board, and why would you say the real estate sector is actually losing so much of ground?
I think, as I've stated earlier, it's because the pre-sales numbers, ignited a lot of jubilation within this pack, and a lot of buying happened. Even I was, optimistic on the real estate pack, but the kind of numbers these companies posted were not in line with those pre-sales figures. Therefore, it eventually dented the sentiments. Going ahead, this particular phenomena I do not expect to last in the later half of the year, because the 1% repo rate impact will likely to show up its gains to the customers in the later half of the year, and therefore I see that going forward in a 3 months or a 6 months kind of an horizon, this particular sales space will pick up pace. Therefore, if any dip is there, I think this is a good sign for investors to buy these stocks, namely DLF, Lodha, Sobha Developers, which are very well placed and are doing performing actually well to accumulate them at a lower rates.
Okay, fair point. So this might actually be giving some opportunity to investors to really look at these dips to add on to some of the quality names, is what Gaurav believe is not very perturbed with the kind of reaction that we are seeing at this point in time. In fact, for the long-term investors, it could just well be an opportunity. All right, but let's discuss, that spoilt the sentiment right in the beginning of the markets today, and it has held on to losses. It's the IT pack. Now, the weekend news of TCS about to slash 12,000 employees over the next 12 months has definitely brought in a lot of conversations to fore. There are concerns about AI-led, losses of jobs that was already being talked about, but finally maybe getting implemented as well, even though TCS themselves has said that this is not just for an AI-led losses that they are going to be seeing in the company, but this also raises a larger question of what next after TCS, when the largest IT firm goes ahead and talks about the historically biggest ever layoff that they are planning. What happens to the other lineup, and will there other companies which will follow suit as well? That's another key question. The third question that will come in is that whether this is just the tip of the iceberg. Will it be just rested at 12,000, or will there be more? Because globally, we have seen there have been many rounds of layoffs that have taken place at the global IT giants, Amazon, Meta, Microsoft. We've seen all of them face this over the last couple of years. So how would you really look at, what's taken place at TCS? What would your suggestion to clients holding big IT positions will be?
See, I think when someone talks about AI related job cuts in an IT firm, that's kind of a funny that IT innovation is leading to IT job cuts now. So I think let's not focus on that front. That is what TCS has also clarified. There are a host of other factors. TCS is a company that holds lakhs of people. 12,000 is quite a number. The percentage figure stands at 2% of its of its total manpower strength across the globe. And when you ask that other companies may also follow suit, yes, it is quite likely that other larger players could have a similar move coming in the coming quarters. So this is generally IT follows a broader trend, and at least the larger peers fall suit. So this particular phenomena can have, and I probably think will have an impact on other IT companies, namely Infosys, HCL, Techem for that matter, which have such large manpower. Apart from that, what I see from a share markets perspective, when we talk about larger IT names, I don't really see that much of a pain is left. That is the reason why IT is among the less sold off sectors in today's trading session. And going forward, also, I do not see much of a selling coming within the IT space. Rather, IT would be a sector that would come up and provide some cushion to the markets. Well, at the time of a sleep slide.
Okay, there used to be a lot of debate about large cap IT vis-a-vis mid cap IT, and how are we really looking at that space? Is the mid cap IT, has enough, growth potential vis-a-vis the top players in the market? I mean, those were being preferred names like Birla, Softco, Forge, Persistent. They've all had a great past as well. How would you really advise investors or going big on the mid cap IT space also? Should they be cautious now?
Not much. Being stock specific is, I think, the main rule here. When we talk about the larger companies, they are entering a sweet, safe position here. So one can start adding up at current levels. I don't see a much of a downfall. When we talk about the mid cap company stocks like Emphasis and Coforge, which drive good revenue from the BFSI segment, again are very much well placed and are quite likely to show signs of reversal anytime soon. So I think one should always have a kitty or a portfolio in which a large and a mid both stocks with respect to IT should be there.
Okay, fair point. So that's as far as the IT space is concerned. Let's discuss some of the other aspects too. Let's discuss, pharma, for instance, especially the diagnostics, laboratory related stocks. That's where some momentum is getting generated. We've seen how Laurus Labs is jumping in trade today. We also have Vijaya Diagnostics, that the stock has jumped about 20% on improved revenue growth and margins having maintained as well. How are you looking at these? CDMO, diagnostics, laboratory related plays. Is this a space to really watch out for closely now?
Well, of course, this is one place which will be ineffective from the Trump tariffs. Whatever the tariffs may be imposed on on the pharma companies, which will have they will have minimal or in some cases no impact on the laboratory stocks, because they drive their revenue directly from within India.
Okay. Let me also pull up a few more other spaces. So that's pharma. What about FMCG? In this kind of a setup in the market where the sentiment is only going weak and the earnings are also not coming in as promising, do you think more and more defensive plays will get more attention from investors?
Well, of course, the defensives will be one among the top picks here. But I think the results will start coming in on a better note in the later half. What the commentary, if I'm recall it perfectly, that most of the companies are reporting that higher input costs is having a toll on their revenue and income front. I think in the later half of the session, this should pick up. Most of the companies have managed a sales growth of above 5% for an FMCG pack. 5% plus growth is not at all bad. So they are actually maintaining the pace. And if we simply look at the trend in the FMCG, they are among the faster ones to actually uh, shift over the burden of higher input cost to the customers, or maybe reducing the size of the packet. So this way they are able to mitigate the earning front.
Okay, fair point. So that's the FMCG space for you. Let me also just understand from you when it comes to a few more pockets. Adani Group stocks, have you been looking at some of the earnings that have come in and how the reaction is today? Again, Adani Green, Adani Energy Solutions, these stocks are higher in trade. What's your suggestion and how is your approach towards this sector right now?
See, when we talk about Adani Green specifically, at least a 3 years kind of an investment horizon one should take when looking at green energy stocks. There is a new gen sector emerging in India, and a lot of participation is being seen. Good government incentives and initiatives are there which will benefit this sector. But at on a very immediate or short term basis, I don't really see these stocks coming up out of the woods.
Okay, fair point. We'll keep in mind that viewpoint as well. Let's talk about some of the outperformers then. I just mentioned Cardtrade Tech from the Nifty 500 basket. The stock is up by about 11%. That's after the company has reported a doubling of the profit in this quarter and an EBITDA that has also jumped by about 98% or so as well. And that's why this new age tech player is again coming back into focus. Now, the profitability is up by 105% to 47 crores, up from 23 crores. Previously, and revenues also improved by 22%. EBITDA has doubled to 44 crores. Operating margins have expanded sharply to 25% vis-a-vis 15% in the quarter ago period as well. And the consumer business has actually grown by 32%. EBITDA has jumped here by 169%. How would you really look at Cardtrade Tech at this point? This space, new age tech space, was largely being dominated by outperformers like a Zomato and Swiggy thus far. But slowly and gradually, we are seeing some improvement in earnings and fundamentals of, say, a delivery and now a car trade tech as well. Would you be now keenly looking at it, or will there be still some more time before you watch this closely?
Well, Sakshi very rightly pointed out these new age companies have started performing and they are performing very well nowadays. Zomato came up with a stellar set of numbers, which was a complete surprise. Again, the same is the case with Cardtrade Tech now. Before the numbers, also the stock was performing quite well. From past couple of months, it was trading with a higher trajectory. Today itself, it went on to test its lifetime highs. Currently trading about 8% higher. The kind of volume is indicating that more room of an upside is possible. If we simply look at its charts, I think 22,2300 is very close by.
Okay, got that. I hope this has also given some understanding to all our viewers. Let me just also pull up a few more spaces. We were talking about, you yourself mentioned that Kotak Mahindra Bank was a big dampener in the earnings over the weekend. So, how are you approaching the big banks and this entire space now, banking financials, which was so far hailed as a consensus play, and it has played its part well in the recovery in the markets as well over the last couple of months and quarters. But what next? I mean, and how would you really look at some of these banking plays now?
ICICI and HDFC Bank came up with good set of numbers. ICICI Bank was a complete surprise on the positive side, and Kotak Bank is somewhat on the negative side. So I think Kotak Bank will somewhat lie low for next couple of maybe uh, a week or two, and ultimately it will start gaining momentum once the stock comes down to 1850 odd levels where some important supports are there. So another, 100 points or a 5% cut from here is possible. So somewhat around those levels, one should start considering accumulating the stock. And apart from this, Axis Bank from the larger space is one stock which is already trading near to its support level. So I don't really see much of a further downside here. It will find somewhere support somewhat around 1050 odd levels.
Okay, fair point. What about the NBFC space? Some of those players are actually holding up. Say, a Shriram Finance has been holding up, Poonawalla FinCorp. These are the, NBFCs that are still holding up in trade. How are you looking at that aspect?
We are positive, overall positive on the NBFC space. the stocks that we have talked about, Shriram Finance still remains to be one of our favorite picks. Apart from that, the housing finance space still remains our favorite. As I've said that in the later half of the year, I'm expecting the sales figures of the real estate company picking up. Therefore, it will have a direct positive impact on the housing finance companies as well. The transmission delay will be mitigated, and eventually the clients, the loan people who are taking up loans will start getting the benefit of the 1% repo rate cut.
Okay, got that. Let me just quickly also get you to talk about the defense space as well, Gaurav, especially BEL. The earnings came in for this one. The company has disclosed an order inflow worth 7,348 crore rupees, out of which 27% of their order inflow guidance for the full year, which stands at 27,000 odd crores. So that's what they have already achieved. Now, we want to also understand from you, this stock had in the recent run up in the defense rally had climbed up to new fresh record high levels, but in the run up to the earnings in the last 1 month, the stock is corrected by about 9 odd percent. How would you approach Bharat Electronics now, and what's your overall sense on the defense space?
A very fine company, closely working with DRDO, and achieving the targets of the government. Now all set for getting and receiving the export orders as well. Any decline from the current levels that takes the stock towards 370 odd levels will clearly be a good buying opportunity. Although yes, I am not suggesting medium term traders to, or the short term traders to put in the bets right now. But yes, on a dip 8 to 10% from now, the stock will be a attractive bet. The overall defense space still looks attractive, no doubt about it. They are continuously getting orders. Mazagon Dock remains our preferred pick, with the recent 1 lakh plus crore order coming in. Major beneficiary of the same would be Mazagon Dock. But we'll look at it from a 2 to 3 years perspective. So nothing in this news for the traders, but from an investment perspective, any decline should be considered fresh buying opportunity. Again, a 2 3 years view should be kept.
Okay, fair point. All right, Gaurav, it's 3:22. Let's try and focus on some of the stocks as well. We've started off this expiry week on a fairly low note, 154 points, still lower. But will there be any stock ideas that you would want to share, maybe as PT, ST, STBT, or maybe from a positional perspective that investors can keep on their mind?
Yes, of course. Considering the kind of move that we have witnessed in past three trading sessions, Nifty has hit lower lows and actually closed at a low, maybe at the lower point or at close to the lowest point of the day, and that is what exactly we are witnessing in today's trade as well. Nifty is closing near to the lowest point of the day, so it is at best to keep a mix of both a PTST as well as an STBT. From first, let's take at STBT, which will actually be the kind of a move that we are seeing. Chambal Fertilizers is one stock that can be considered on the sell side. One can take a short position at current levels, that is 530, keeping a small stop at 542, and look for targets close to 510, 505 in tomorrow's trade. From a buying perspective, I'm taking a different league stock, that is a Supreme Industry, somewhat from the plastic maker space. This stock is very well placed on chart, trading very close to the confluence zone of its short and medium and long term averages. So we suggest a buy around the current zone of close to 4,300 odd levels. One can take a stop at 4125 and look for targets close to 4425, 4500.
Okay, fair point. I hope you have noted that down, viewers. One more stock that I wanted your attention on is CDSL. The depository stock that has been in focus since morning because of the earnings that have come in. The stock has been again lying low, especially ahead of NSDL's IPO that comes in this week itself. Now, of course, both of them will be almost playing in a similar field, although CDSL is more retail focused and NSDL is more institutional focused as well. But at the same time, when we talk about the capital markets growth story, if investors have to choose between the two and, probably have to choose which is the best one for their portfolio, how are you advising clients to, go about it?
Yeah, firstly, the CDSL numbers is just not a surprise. Uh, this was very much that we were expecting, but a 6% cut is not what we were expecting, in the initial day itself. I think this is the impact of both the NSDL IPO plus the CDSL numbers, due to which we are seeing a 6% cut on the CDSL today. When we talk about the IPO, I think it is just similar to the NSE, BSE, and the CDSL, NSDL. They are one of the same things. You have rightly pointed out NSDL concentrates largely on the institutional clients, and henceforth drives a much lesser kind of a volume. But when we take up the profitability front, NSDL is well placed. So I think both of these are good companies. It would clearly depend on a personal perspective where the investor wants to park their money. With India growth story, with the number of trading accounts increasing, NSDL will be a direct beneficiary to it, and with the ticket size increasing, NSDL would be a beneficiary. So I think it's just two parts of the same coin.
Okay, Gaurav, then help us understand with your view on the market still expiry. How are you looking to trade the Nifty and the Nifty Bank?
I think little more downside is pretty much possible.
Hmm.
A 200 point cut is what I'm expecting as we go closer to the expiry, somewhat close to 24, 400, 450 odd levels is a level where the market can somewhere settle down or at least test. Because that's a mark from where it has reversed a couple of times, and if that is broken down, then 24 200 and much lower levels would be seen. So therefore I'm not expecting these kind of lower levels this week only, at least till Thursday.
Okay, fair point. All right, Gaurav. Thank you so much for being with us on the program and helping us and our viewers get an overview on the markets and where exactly to keep their focus and where to stay clear. Thank you so much. Appreciate your time as always on the program.
It was a pleasure. Thank you so much for having me on the show.
Thank you. All right, viewers, what we'll do is we'll start wrapping up the day's trade. It's turned out to be, Monday blues for the markets. You can clearly see 24,680 on the Nifty, 155 points lower in trade. Very, very choppy session. And of course, seeing a lot of cuts across the board. Pharma, FMCG, the lone gainers amongst sectors, gains limited to just 0.3%. There is a sharp spike on India Weeks, over 7.5% kind of a jump. You can clearly see 12.1 odd levels now being seen on India Weeks, and that's the kind of fear that's getting induced into the market as well. In fact, even if we actually look at what's really happened over the last 3 odd trading sessions, we have actually seen the markets lose about 13 lakh crore rupees in the market cap for investors. Of course, the 3 large reasons or the big reasons behind this sell-off in the markets clearly is the weak set of earnings and disappointments that are coming in from large companies, IT, banking, now 2 heavyweight sectors that have been reporting weak setup of the numbers. Then there is also the trade-related uncertainties. India still does not have a deal yet. 1st August deadline is approaching. Even though we are seeing deals being signed with EU, with China, the talks are consistently on, but there is still no sign of an interim deal that was being hoped for at least being signed before 1st of August. That still not is in place, so we'll have to clearly watch out for that in this week so far. And apart from that, technically also a lot of crucial levels are being tested on the lower side, and that's also keeping the sentiments low for the markets. Top movers, Shriram Finance, Cipla, Hero Moto, HUL, SBI Life. Whereas on the downside, you have names like Kotak Mahindra Bank 7.5% lower, Bajaj Finance 3.5% lower, Wipro, Indusind Bank 2.5% lower, Bharti Airtel, Titan as the ones that are also dragging in trade. When we look at the Nifty next 50 names, you will see Adani Green Energy topping after the momentum has taken it 3.5% higher. Dabur, Samvardhan Motherson from the auto ancillary pack, Varun Beverages, Tata Power, Bosch, TVS Motor, a lot of these two-wheeler names seem to be buzzing in trade in an otherwise weak setup of the market. We are also looking at some stocks within the broadest index, Nifty 500, that are holding up. Simbhauli Sugars is higher in trade. Hind Rectifiers, Laurus Labs we marked out. Vijaya Diagnostics we marked out. Names like even Sterlite Technologies, Sudarshan Chemicals, Arcade Ply Industries, these are the names. Vimta Labs, that's also hovering higher. Acme Solar, Cardtrade Technologies, these are the names that are up and about in the broadest setup. But 156 points lower for the Nifty. 24,680 in trade today. All right, viewers, we'll wrap it up on that note, but do stay tuned on to Business Today Television as we continue to get you fascinating insights from the world of business and finance on the other side.
Very warm welcome to you on Business Today Television. We start the week in markets at the fag end of July on a slight